Hello, everybody, and welcome to another edition of the Richard Haynes Real Estate Show. It's September 30th, 2024, officially fall, and I'm fired up to get after another solo microcast with you. This one's going to be quick, but it's real, stone cold hard data on California real estate as it relates to interest rates, which is one of the hottest questions I've been getting over the last 2 months as interest rates have been coming down. You guys, in case you haven't listened to a podcast before with us, we are Haynes Real Estate here. I am the broker of record here, Richard Haynes, where we cover the South Bay markets of Greater Los Angeles. That's the Palos Verdes Peninsula, Manhattan Beach, Redondo Beach, Hermosa Beach. And of course, we cover other areas of the South Bay, but for the blog, our podcast, and our Instagram, we really focus from PV to Manhattan Beach. Today, though, is a little bit more holistic. It's about California real estate, the entire state, and how it operates in shifting interest rate times. So I'm going to get right into this today. This is very interesting data for all of our listeners. And if you're a reader, go to our haynesre.com/blog to read the stone cold numbers on my recent blog post. So what's the topic today? I'm just going to give you a title. Why interest rates dropping doesn't mean rising home prices, and specifically in the state of California. And why am I stating this in a title? Well, everyone has been calling us, our buying clients, our seller clients, going, hey, rates are finally dropping. I think we're going to see a stronger real estate market that just surges higher. And while that notion makes sense, lower interest rates, more affordability for buyers, bringing more people in, driving up the home price, people can afford more in mortgage. That makes a lot of sense that prices can go higher, but I've done some digging on the data, and it's not true when you look back in California's history. Now, before we get into that data, I want you guys to know we've seen some tumultuous interest rate times and some up and down real estate times just in the past 4 or 5 years with COVID. We were in a time where in 2019, we had a very soft market and we're falling, looking to fall with very stable interest rates. And then, of course, we had COVID hit, and the way the market was going, it was going to crash without interest rates coming down. We had stimulus to help prop up the market. And then, of course, we've seen interest rates rise recently for the last 2 years, and prices still chug higher slowly but surely. So you guys, there are all sorts of notions of believing, well, if interest rates go up, prices should go down. In the past 2 years, we just have not seen that. So setting that aside and going out on a tangent, let's get into the stone cold data. You guys, I went back on 4 specific time periods in the state of California with median home prices and interest rate fluctuation. And what we found was interesting. So let's get into it. From 1972 to 1980, that's an 8-year period, we saw interest rates go up from 7.4% to 12.4%. That was a 5% jump in interest rates over 8 years. You think that would erode affordability, that would keep buyers out of the market. Instead, in that 72 to 80 period, median prices went up from $28,000 to $99,000, you guys. That's insane. Real estate prices tripled in an 8-year period. That's crazy. That's like a $1.5 million house today in 8 years going to $4.5 million. I don't know if we'll see that again in a lifetime. I don't want to act like it can't happen, but interest rates rose significantly, and you think that would hurt housing prices. Instead, housing prices tripled in 8 years. That's incredible. The second of 4 time periods, 1981 to 1989, another 8-year period, interest rates came down from 14.3% to 9.8%. So another 3.5% drop. Prices at that time were at $107,000 for the median price, and they jumped again to $196,000. So in another 8-year period, we saw interest rates fall, but prices did go up, which is kind of the natural notion people are thinking about now, and they nearly doubled in price in that 8-year period in the 80s. Let's fast forward to the third time period out of 4. From 1990 to 1996, interest rates went down. That should fuel the market higher. From 90 to 96, down from 9.75 to about 7.5. That's a 2.5% drop. Houses should get more affordable. More buyers should come in. No, not the case this time. Interest rates went down, and home prices went down from $193,000 to $177,000. You guys, that was kind of a lost decade in the 90s for California home prices. Interest rates went down, and contrary to popular belief, real estate or home prices went down as well. And finally, to wrap up the other data dig, 2000 to 2005, right before the Great Recession and the housing bubble, so this is housing bubble type activity, interest rates went down from 7.86 to 5.85, about a 2% drop, and housing prices surged from $240,000 to $522,000, so a little more than double over that 5-year period. Of course, we saw the housing bubble burst after that, and there's a couple more examples from recovery after the housing bubble burst, and then more examples in COVID. But I just wanted to go deep back in history because the recovery from the recession and COVID is all pretty fresh on everyone's minds. And I think these 70s to early 2000s is great perspective for all of you. So essentially what I'm trying to get at is there is a very weak correlation with interest rates and median home prices in the state of California based on looking at history. We've seen examples of interest rates go up and prices go up. You saw examples of interest rates going down and prices actually going down as well. And then, of course, there's 2 examples of interest rates going down and that popular notion that prices go up, and that has been confirmed. But you guys, I want you to know, even though we have this popular notion of today that interest rates are going down and housing prices should continue to go up, you simply can't rely on that according to history. Of course, it could actually happen, but there are so many additional factors beyond interest rates that cause housing prices to go up and down. There are financial bubbles fueled by loose bank regulations. There are demographic trends with huge demographic bases becoming of age and starting families, or gaps in demographics where there's weaker demand, and all sorts of other factors that affect buyers and sellers' decision making, which is so much greater than just interest rates. So you guys, I'm going to keep this podcast really short. I don't want you guys to get lost in the minutia of interest rates and housing prices. If you're a seller and you're excited that interest rates are coming down and it's going to fuel your price higher, that's great. And I'm glad you're confident, but no, that is not the only factor of why you should put your home on the market. You should put it on the market when the time is right for you to sell, to move into a move-up home, or if you have an incredible opportunity to do a 1031 exchange, or if life just dictates that it makes sense to sell. On the other hand, buyers, I know a lot of you are going, let's jump the gun, let's get in and buy a house before interest rates come down even more because that could fuel prices higher. Absolutely. You could be right, and history has said at some times you are right. But there has been other times in history where prices don't go higher. So make sure, if you are trying to beat everyone to buying a home, that you actually can afford it and the time's right. And it doesn't matter if the house goes up or down. It's because you love that home, can afford it, and it's the right time. And for you buyers who are sitting on the sidelines or sweating that you're going to have all this competition, but you need one more year to get that raise or that bonus or grow the down payment a little bit, don't sweat that you're going to be left behind. Everyone else is working to grow their income and their net worth, and know that it's not going to outpace you. The time to buy is when you're ready. And just because interest rates are falling doesn't mean that the market is going to go out of control and get too far away for you to purchase. Do it when you're ready. All right, you guys, that's a great short episode for you. Please, please, please don't let interest rates dictate your real estate decision makings. Do it when you're right. There is a weak correlation. Happy hunting as buyers and sellers. I hope you get top price. We'll see you next time on the Richard Haynes Real Estate Show. We're doing quarterly numbers for the third quarter. It's a can't miss episode. I'll see you next week, and take care.